Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 16th of July 2017 and we're providing our gold and silver weekly update for the week ending the 14th of July. Gold rose $16 last week from $1,213 to $1,229, having hit a high of $1,231 and a low of $1,205. In sterling terms, gold finished the week at £938. That's down £3. And in euros, it closed at €1,071. That's up €8 on the week. Silver rose 37 cents, from $15.62 to $15.99, having hit a high of $16.05 and a low of $15.21. In sterling terms, it closed at £12.21. That's up 9 pence for the week. And in euros, it closed at €13.94. That's up 0.24 euros. The gold to silver ratio fell slightly from 77.66 to 1 to 76.86 to 1. The Dow Jones closed on Friday at 21,637, up 84 points on the day and up 223 points on the week. And the NASDAQ closed at 6,312, up 38 points on the day and up 159 points on the week. Brent crude rose $2.20 from $46.91 to $48.91. Correction from $46.71 to $48.91. And US light crude rose $2.31 from $44.23 to $46.54. The dollar index stands at 95.15. That's down 0.85 on the week. Last week we saw a rise in the value of gold by some $16 on the week, as economic data and Janet Yellen's comments suggested that interest rates were unlikely to rise again this year. Well, that's what some commentators are saying, but not us. On Thursday, we published a video, Why Gold and Silver Prices Have Further to Fall in 2017, and we did so because our interpretation of Yellen's comments was not that interest rates would not move up again this year, but actually the opposite. They are likely to move up again, but that it won't be long before they reach that level where the Fed believes they can be maintained for a long time. In fact, the gold rally, some $20 from its week's low, is quite tiny considering the perceived dovish tones, whereas the stock markets rallied and will, in our opinion, continue to do so. We see gold moving this week between $1,200 and $1,240 and then breaking down again below $1,200. Silver markets found $16 extremely resistive, having only managed to hit $16.05 and then fell back again below $16. We again, as with gold, see silver prices falling back and heading to breach that $15 level over the next few weeks. If one carries out a brief analysis of the dollar, they will see that the dollar fall this week almost exclusively caused the value of gold and silver to rise by a similar amount, when frankly, with so many people believing that interest rates will not rise, should have caused gold and silver to rise to a greater extent, if it were not for the fact that investors see equities as a better proposition right now. We maintain our bearish stance for gold and silver for the next 3 to 4 weeks, unless of course some significant political and military action occurs. You may be interested to hear that shareholdings in the GLD have shrunk this week to the smallest level since the new year. Hedge funds have slashed their bullish betting on COMEX futures and options to the lowest since the start of January 2, and turned bearish on silver derivatives overall. An interesting historic note, too, quoted by Adrian Ash of Bullion Vault, is that, quote, Gold prices tend to rally in the autumn after easing back over the summer months. For UK investors, for instance, gold has ended December higher than its summer lows 16 times in the last 20 years. Analysis puts this down to a mix of sell in May, similar to the stock market, plus lower seasonal demand from China and especially India. Diwali doesn't start until mid-October this year. Some Hindu calendars now have no auspicious days for weddings until November." End quote. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/Illuminati Silver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.